Hey, good afternoon, traders. This is Trader Tim from EminiMind and doing a market analysis video. Today is the 7th of March, 2022. We have a Fed meeting coming up next week and a whole lot of stuff going on globally. But let's just try and focus on the technical aspect of the market. There's always inputs that we can sort of infer or place on the market. Why is the market doing this? Well, it could be because of, X, Y, and Z. But let's try and focus on the technicals because when we're talking about day trading, we're not as concerned about necessarily why something is happening. I'm mostly concerned with how I can, capitalize on the movements that are taking place. So let's take a look at the daily chart here and then go into the intraday. So on the daily chart with the E-mini S&P, we had started from the all-time highs down to the swing low back in January, traded at that 50%, and then come down to what is, really a large extension from highs just before the COVID sell-off to all-time highs. And that is this yellow line down here, the 4102. Now, I'm going to get rid of this first retracement because the second one bounced and traded not just at the 50, but kind of between the 50 and the 60-18. It was kind of messy, and in the last couple days we've rolled over from there. Notice on this 50% retracement, we did not get a close outside the 60-18. When I'm trading intraday, a break of the 60-18 is enough for me to say that the market's violated trend. But on the daily chart, I like to see a close above or below, if it's a long, that 60-18, outside of the 60-18. So if we can close, in the next 20 minutes here, outside or below this 60-18, 42.27, then that would effectively confirm the break to the downside, and we just get rid of this retracement and then look at the target that we have. We'll just call it a 4,000 on the ES. Another thing that has kind of some checkbox for the bear column is if we scroll back and look at the swing highs on the ES. We have our all-time high up here, and then the next high is a lower high here, and then we come down lower high. This one is just slightly lower, lower high. Now this is our next lower high that we have to break. Um, we had a little bit of a fake out in at this 50% retracement where we came up, we broke not really a swing low, but we broke this candle's low. And it's only a swing low when you have a low that's put in and then we break that candle's high. That develops into a swing low. Whereas over here, we had a big green candle, a second green candle, an inside bar, and then this red bar broke the low of this second green candle, but technically the swing low is way back here. So a bit of a fake out in terms of making this um, formation as kind of a bull flag where we're moving sideways. This really becomes the swing low, this bar on the first, after we break its high on the second. So this swing low break here is also part of, from a technical perspective, fueling the selling. Lots of stops would be placed below that swing low. But in terms of, breaking a swing high, we don't really have a swing high that's been broken on this move down. So in order to do that, this is the current swing high, we would need to put in a, put in a low and bounce effectively, bouncing and then roll over and then come up and break the swing high. Or let's say we just bounce, tomorrow and come all the way up. Well, this is the swing high. It's a 44.14 that we need to break to effectively invalidate that downtrend. One thing was interesting about today is our breadth was, it's been 2 to 1 all day long. That's not very bearish. I'm, uh, you know, if we look at the daily chart here, we don't have much support because we have not traded at these levels. Aside from the 1 day, and so we have not spent much time at these levels. We have the lows just from the tail here and this low on the 23rd, and that's really it. Sometimes we can see those lows act as, a buy point, and it can be seen as support. Sometimes we dip below the lows and then rally, and you kind of get this hammer formation like we had on Friday. But as of 15 minutes before the close here, it's not looking very likely to get a big ripping hammer candle. And so what's more likely to happen this week is for us to drift lower, kind of retest down in these lows, come down towards the 4,000 level, and then get that big kind of intraday. It looks like a big V where you sell off hard and then you rally. And those are, there's some good buying opportunities on those days when you get these massive panic sells. Obviously, there's a lot of outside factors, not just market economic news and things like that are directly related to the stock market, more of a global impact. So there will likely be some highly emotionally charged catalysts that will, send this market moving. Volatility is not crazy high either, so a safe, I would say, a safe environment for day trading at this point. Today, on the 15-minute chart, we did not have a 15-minute break, in this case, breakdown setup. We filled the close within the first 15 minutes, and then we kind of chopped around for a little bit. So had you taken the 15-minute candle as a short, you would have been stopped out. But luckily, because of that, if we fill the prior day's close within the first 15-minute candle, that kind of clause in the strategy, I don't take that setup, and that helps save a whole bunch of stop outs. There were a couple of retracement shorts throughout the morning that were a little bit small and early on, so not really a strong likelihood that you'd be able to stay in for a big sell-off like this. And a lot of times on these sell-off days where we kind of slide like this, where it's not really a massive push down, it's just kind of a slide all day, it's pretty difficult to stay in. I mean, just look at the 15-minute chart. You've got these bounces, and you're talking, 20, 25 points bouncing to the upside, and then doing that multiple times. So, I tend to not see my biggest intraday profit days on this type of environment. There can be, big range days that you end up being really profitable on just because there's a lot of movement. The last thing I want to touch on is Bitcoin real quick. And I posted a chart earlier, a picture earlier of the chart. We have this big ascending triangle forming on Bitcoin. And so, if we can bounce here, we can probably make our way back up to the 45,000 area, and then maybe come back down a fourth time, a fifth time, retest, kind of getting tighter and tighter towards the apex, and then likely make our way back up to 50,000. The swing low and swing high references on Bitcoin, we're talking up here as our swing high, and I'd be using this tail as the swing low down here. This candle, this one green candle, it gapped down and then moved higher. But if we're looking at this from a little bit bigger perspective, major swing low sticks out with this long tail, another long tail sticks out, major swing low, and then in between those, bouncing up to these, kind of 45,000 area, and then been rolling over. So it's just kind of some basic reference points can help keep your cool when the market gets moving quickly. At the very least, it can give you some buy targets where you want to, add to or put on a new swing position and say, okay, I'm going to buy, at 40,000, I'm going to ride it up to 45,000. At least you have those kind of outlined going forward. That way you don't get stuck thinking, oh, the market is, selling off here today. I need to sell everything and panic and get out. instead, should be looking at, okay, where is my next opportunity to get long and buy the dip? Or whether it's a swing trade or a long-term play, it doesn't matter. You want to be thinking a couple steps ahead, just like you were playing chess. Okay, the market's doing this. What happens if it does X, Y, Z? And then what is my plan of attack going to be if it does X, Y, Z? So I hope everyone has a great week. Be safe out there, and I will talk to you all soon.